Hello, good morning. I hope it's okay that I talk in English. So even though I can talk in Polish, I don't want to make people laugh. I'd rather you laugh at my jokes, not at my bad Polish. So what I want to do for the next maybe 20, 30 minutes is kind of go through this topic and leave some room for Q&A. And I want to talk about blockchain. I'm sure that some of the previous speakers probably talked a little bit about blockchain. And the fundamental question is, is it really so disruptive, right? And the answer is, of course, yes. And I'm going to explain why. But there's a lot of myths, there's a lot of noise, there's a lot of confusion around this whole thing. And I personally got involved with my own money. I invested in this company, Bilion. So now I'm helping to basically internationalize this business. And so I'll take you a little bit on what I've learned in a very pragmatic way, and I'm really eager to hear what your questions are on this particular topic. A bit about me. So I was introduced. Indeed, I'm a tech investor. I invest in this. I invest in big data analytics. I've also got some virtual reality investments, things like that. Co-founded Intellego years ago. Huge success. Interestingly enough, the Intellego technology platform is the platform being used for Bleak. So interesting trivia point there. Yeah, then I was at HSBC and in the Czech Republic at Equibank. At the bottom, I'm not a fan of Bitcoin at all. So sorry for the two people already invested there. What's really happening now and over the last 12 months is the big thing that's really happened in this whole space is there's been a complete separation now of the discussion of Bitcoin and blockchain. So people now view Bitcoin as just simply a currency or a store of value. And they're more excited about the underlying technology, the blockchain technology. But if you look at some of the hype around Bitcoin, I mean, it is quite interesting, right? So, if you look at it from a currency point of view, maybe it will be number 6 in the world. I mean, it's interesting how the currencies are really ultimately consolidating, right? So the dollar, euro, and pound are really the dominant currencies. A bit more on blockchain. I mean, with Bitcoin, Bitcoin is really, it's the dominant currency. The other ones are really kind of quite small. And I'll talk a little bit about Ripple and Ethereum during the course of this discussion. But I mean, they're struggling a little bit because it's a question of, are they really a Bitcoin company or are they really a blockchain company? And they're trying desperately to now be blockchain companies. Okay. But, oops, here we go. But anyhow, so why is this important? Well, everybody's saying this in different ways, right? They're saying that you should be taking blockchain extremely seriously. This is the revolution in a lot of people's minds of the next decade, right? I mean, this is as serious as, the birth of internet. And to back that up, people are backing this up with basically their wallets. So if you look at kind of, the early days of internet, right? Do I have a pointer? I think maybe I do. Oh, there we go. Okay, so like, in 1995, internet investments took in a total of, 200 million and then jumped up to 600 million. Now you look at Bitcoin, this is Bitcoin and blockchain, it basically took in about the same amount. So it's almost the same dynamic. So people are betting as heavily on this technology as they did in the early days of the internet. FinTech is absolutely red hot, but blockchain is even hotter, right? So if you look at total FinTech financing activity, I mean, 2014 was a breakout year. 2015, I forget what the final numbers are, but obviously they're even higher than 2014. I mean, people are plowing huge amounts of money now into FinTech. But if you look at what's happening in a combination of Bitcoin and, distributed ledger technology, which is blockchain, you see that the dynamic is even more aggressive. So, here it looked like in the first half of 2015, global FinTech was, pretty much on track to hit the same mark. In the first half of 2015, it had already passed up 2014. So, and as a percentage of funding, I mean, it's now growing. It's, what is that? I think it's over 10, 20% of total funding flowing into blockchain stuff. So lots and lots of money. The numbers are this. So, cumulative to date, over $900 million has gone into Bitcoin and now blockchain. Some really big bets. So a Bitcoin mining company now has already raised $121 million. There's 800 startups out there. There's 30 banks participating. This is absolutely the number one topic amongst all the banks. So what am I going to talk about today? Well, I'm going to first demystify a little bit about blockchain and distributed ledger technology. I'll talk about the two different types. So I'll talk about what was derived from Bitcoin, and I'm also going to talk a little bit about my company, Bilion, and how we did it slightly differently. Of course, it's a Polish company, so they have to do it their own way, and you know the story there. So I'll explain what we're doing. And then I want to discuss where it is that blockchain is really disruptive and where it's not. So it's not going to disrupt absolutely everything, but there's a very long list of stuff that it will disrupt. Okay? If anybody has a question, just raise your hand during the middle, please. Okay, so definition. What is blockchain? Blockchain is a distributed ledger that is essentially a chain of transactions. So every single time you take a transaction, it keeps amending it, it's encrypted, and as it grows, effectively it becomes a store of information. The beauty of it is that it's stored decentrally or it's in the cloud. So as the information grows, you don't necessarily have to increase the size of your servers as it grows. Well, so what? I mean, what's the big deal there? Well, the big deal is this, is that historically, all of the investment of a bank was about protecting access to information, right? So I built Intellego, then I also built Equibank. Intellego cost us $9.5 million for the technology platform for Intellego to build it. And I can't exactly say how much of it was all related to essentially protecting access to the data, but I could say that we probably spent about $1.5 million on just redundant hardware for the data center alone. Equibank was about the same story, it was about 12 million euros. We had a lot more products, but again, it was about, what's the backup center look like? What does disaster recovery look like? Everything like this. So here, when you're basically putting the information out there, I mean, you're not blocking access to the information anymore. What you're doing is you're actually encrypting the data itself. So everybody can see the information. I mean, you're on the internet now. I mean, it's floating around. I mean, all this money, $5 billion, dollars worth of Bitcoin is floating around. I mean, you can see it, you can touch it, but you can't read it, right? I mean, unless you have the right sort of readers, you can't read it because it's effectively encrypted and you can't change it, which is the most important thing. And the way you visualize this is that, effectively it's distributed ledger. So every single time there's a transaction, both sides of the ledger interact, and then that information is effectively encrypted and amended to the ever-growing blockchain. So that's a way to think about this. Okay. So it's a revolution, right? So you're moving from centralized on the right to decentralized. So when you go decentralized, now you have a lower cost. You don't have the same cost of security. You don't have the same sort of hardware costs. You can't alter the data. It's very, very resilient. I mean, if somebody does somehow try to hack it or grab it, I mean, they can only grab bits of it. They can't grab the entire database. Versus centralized, right? So if I continue to go centralized, it's fine. And I could even argue that I can get faster decision making if the information is centralized. But, it's only within one party. And so, banks still want to stay centralized, right? They want that last piece. They want that feeling of control. But that feeling of control comes with also an invitation to be hacked, right? So I want to hack that bank. I want to get through that firewall, because if I can get through that firewall, I can get to that data, and I can alter that data, or I can move the money to myself or something like that. If I put all that on the blockchain, can't do it. There's no way. I mean, there's nothing to hack, right? It's a decentralized blockchain that's out there. There's no central database anymore. So, okay, there's a lot of different genres though. So this is where it starts to get confusing, right? So blockchain is not just blockchain. You've got the stuff that came from kind of Bitcoin. So this is all about mining this. It's about consensus model. So what happens is the coins are created, but created by some anonymous third party. If 51% of all the coins agree that that's a valid coin, then it's allowed to be transacted. So it's designed, and the way the Bitcoin was designed was essentially to work without trust. So the birth of it was, this Satoshi paper. I don't know if it was a person, I don't know if it was an organization, nobody knows exactly who Satoshi was, but effectively it was a hacking organization that in 2009 created this whole concept that the US dollar was going to explode. So we want to create this virtual money, and we want to make it so that nobody could alter it, nobody could know who we are, so it was completely anonymous, it was completely trustless. And so that was the birth of Bitcoin. And in the early days, indeed, the early adopters were speculators. I don't know. Everybody speculates it was probably people doing, gray economy, money laundering. So that was really the birth of Bitcoin. But then now you have these things that are kind of domain specific. So now people are developing solutions that are integrated into systems. They have private platforms as well, which are a little bit more closed. And then you also have this other type of version, which is open source. So you're going to see a lot of this, right? So you're going to see a lot of hype around, Ethereum and what you can do. I mean, right now, I could literally go on to Ethereum. I can do a hot deploy in a week, right? So I can say, great, I'm going to create a blockchain, today, and I'm going to store all my, family information. I can do it. Not a problem. It's really amazing what you can do now with this open source stuff. The issue, though, is that this open source stuff, when you start to work into the banking environment, it's a bit problematic because it's still based on this whole concept of, a trustless functioning. So it has some design flaws. Okay. So that was confusing, probably. This is probably more confusing, right? This is the list of everything that people are thinking about as to what you can do with a blockchain, right? So it's a long list. The bottom line is this, is wherever there is like a piece of information or something that you want to store for long periods of time, the blockchain is absolutely fantastic. So, I talked to somebody from UBS this week in London. They're doing stuff around bonds, and they say, look, you have a bond and it exists for like 25 years, and there's all these different events on the bond. Somebody has to make a payment, there's a servicing event, there's everything like this, and you want to keep a complete record of all of that for 25 years. I mean, this is the perfect instrument for it. Land registries, things like, trust information. Obviously, your complete medical records could be put on the blockchain. I mean, it's really quite revolutionary. It's not just FinTech. Okay. So let's talk about one case study, just so you know exactly what we're talking about, and then I'll talk a little bit about Bilion. So let's talk about smart contracts. So indeed, this is this kind of UBS thing, right? So, it's not just information that's being stored, it's also business logic. And what they can do in this is that effectively you can create a contract, right? So you can say, I'm going to put this information about this bond out there, and I can make it self-executing. I can define all the conditions. I can put the triggers in there. I can put settlement. So they're not just putting data in there. They're actually putting business logic. So the way it works today, a bit confusing slide, but counterpart A and counterpart B, want to exchange a bond for $100 million. So counterpart A is sending the cash, counterpart B's got the bond. They, of course, are contacting the bank, so they instruct the bank to make the transfer, and of course, there's a custodial service that's behind it. So indeed, here, the person with the bond instructs the custodial to move the bonds to party A, and all of this stuff is being settled here in the middle by SWIFT, by service by SWIFT, right? So that's how it works today. There's delays. You have to wait for, obviously, first the bonds to be moved. You have to have a confirmation of it. There's a bit of an escrow. There's lots of risk there, and so there's lots of fees. Okay, so how does it work with blockchain? So now it's different, right? So counterpart A and counterpart B, they decide they're going to have this bond for $100 million. They're basically booking the information into the smart contract, and as soon as they both say fine, done, agreed, the whole contract executes, right? So the cash and the bond are exchanged. There's a real-time feed to the custodials to inform them that everything is done and it's closed. You don't have an escrow anymore. You don't have any of the settlement costs. Everything is simplified. So this is a massive, massive, massive change. Okay. Okay, so a second case study. So now I'll talk a little bit about our company, Bilion. So what Bilion did is Bilion has focused heavily on, how do you take the blockchain and actually make a micropayment profitable. So if somebody wants to make a payment below $10 on a card today, credit card or debit card, it's basically unprofitable, right? I mean, there's too many fees that are associated, interchange fees and processing fees. The Visa, MasterCard are involved, the terminal operators involved. It's very, very, very expensive. The other thing too is that it's very clunky as well. So if I want to, if I'm playing, I don't know, League of Legends or something like that, and I want to make a payment, I've got to use it like Premium SMS or PaySafe card or something like that. So there's this massive world of alternative payments. So we said, why don't we create PayPal, right? So effectively, we're creating PayPal, but we're putting the whole thing on the blockchain. So we go from the old world, where you have a five-party scheme. So you got a consumer, and they have an issuing bank, and then there's a payment provider behind that, so like Visa, an acquirer and a merchant. And you just say, look, it's just consumer merchant. That's it, right? And so what we do is we give our software to the bank, and so the bank basically owns the entire process end to end. So they own the consumer relationship, they own the merchant relationship. They no longer have to share any fees with Visa or MasterCard. They become PayPal. Simple as that. I mean, from a financial point of view, it's outstanding, right? So what you're doing with this technology is you're going from, an annual cost to serve on a current account of roughly $30 to $150 to basically almost zero. I mean, the only cost that still remains is KYC and AML. Revenues are higher. There's a bit higher float because the money's kind of floating there a little bit longer. You always have breakage, FX, and you can put some additional fees in there. So from an economic point of view, it's very, very powerful. And this is revolutionary, right? So the banks that adopt this type of approach are going to be the ones that are going to be winning, right? And the ones that kind of stick with the old rails, those are the guys who are going to be stick with the very, very high costs. Okay. Also, as well as because you're doing stuff on the blockchain, you can settle things in real time much faster. You don't have to redirect. You don't have to jump from one screen to another screen to put in all your authorization details or anything like that. Pretty much, both parties know each other. They just have the nicknames and they just settle, the way that PayPal would settle, but without the additional hassle of a bank account in the middle. So we timed the transaction time. So this is the total user experience transaction time. So this is not just the time of the actual settlement, but it's like when you actually decide to do something and you have to put your data in. So you can see that for a bank account, it's like 1:30, PayPal almost a minute, credit card, so on and so forth. And if you're doing stuff with Bilion on the blockchain, it's basically 12 seconds, and we'll probably drop that down to about 5 or 6 within the next 6 months. Okay, so that's a revolution. So it's a revolution in cost savings. It's a revolution in user experience. And 1.2 is, for those people who are really into the tech, we did things fundamentally different. So the way that we did it with Bilion is we did it in a regulated fashion. So we started with the whole principle of blockchain, but we changed the way that things are done in terms of how it's mined. So we went from third-party consensus-based to indisputable ownership. The way the transactions are done slightly differently. So since it's just two parties, you can also operate offline. The whole system scales in a logarithmic fashion, which is here, as the blockchain gets longer and longer and longer, it never gets destroyed, so it actually gets slower. So we do it where we actually optimize it for speed. So anyhow, it's showing that potential. So indeed, so what did I talk about? Yes, this is revolutionary. $1 billion going into this space already. It's increasing. I think 2016 is probably going to see another, $400 or $500 million of investment into blockchain stuff. There's many different types of blockchain. There's many different uses. But there's a question of, okay, well, where is it not disruptive, right? So I just don't want you to think that, everything should be suddenly done on blockchain. Well, the stuff that the banks are doing is they're doing things like, repurchase agreements, debt, payments, insurance processing. But what they're not doing is they're not doing stuff like this, right? So they're not doing things where there's like, fuzzy logic, like a risk model, or, I don't know, you're screen scraping all the social sites to try to find out more about a customer, and should you market to that customer? Yes, banks do this. But the data is fuzzy, different addresses, incomplete fields, things like that. You can't really put all that stuff on the blockchain. You have to kind of analyze it, throw stuff out, decide what you want to keep, that sort of stuff. You also don't use blockchain wherever the customer wants special services, like chargebacks and things like this. And also in a lot of situations too, in a lot of use cases, you might actually get to 80% of the benefits just using traditional tech. So you have to be careful there. You don't want to just simply jump into blockchain just to jump into it. There might be a better solution there. Okay. One thing just to point out here is this whole issue of identity. So I don't know if the previous speakers talked about it, but I think one of the key themes in the upcoming years now is this whole issue of identity. So, dirty little secret. So I was meeting yesterday with the Citibank head of compliance, and there's now an EU initiative that's going to be starting. I don't know if it's public knowledge or not, but the terrorists in France were using prepaid cards in order to make payments in order to stay off the grid. Right, so now the EU wants to look at this whole issue of prepaid cards because the issue is an issue of identity, right? You can't let these anonymous payment instruments sit out there. Again, it's going to hit the banks. It's going to hit the banks hard. The banks are going to have to bear the cost of it. So, they're looking actively for these solutions. And I think what you're going to start to see is you're going to start to see a lot of applications of blockchain using identity. There's some huge initiatives now in India around this because people now are getting these national ID cards, and so now you can kind of store your entire identity lifetime, right, from a national point of view on the blockchain. And I think you're going to start to see that sort of stuff. So who knows, maybe in the next 5 years you're going to get a national ID and there's going to be some sort of a blockchain application behind that that's going to store every single time you go through passport control and every single time that you do something. It's a little bit scary, but that's kind of what the tech can do. Okay, so huge confusing space, lots of players out there, lots of different things that are going on, exchanges, brokerage, wallets, ATM sort of stuff and withdrawals, payroll, and then you have infrastructure players. So it's a big and crowded space, but it's going to get more crowded. There's going to be more investment, there's going to be more startups, and there's going to be more opportunities. So if anybody's interested in doing a startup, this might be one of the spaces you might want to look at. Okay, that's it. Hi. Yeah, questions, please.
I actually have a question.
Yes, please.
That was fantastic.
Uh-huh.
When you presented the slide with the internet and Bitcoin, let's say blockchain investment versus
Yeah.
it was 1996, as I recall, it ends up in 1996. But
Yeah.
if you take a look what happened with the investment into internet later on,
Yes.
2001, it was a problem. So do you expect this kind of issue with the blockchain investment?
Well, yeah. No, I agree with you. I think there was this moment when there was a burst of a bubble. However, if you were to look at the rebound and the total amount of investment, I mean, clearly, I don't know how much Facebook raised, hundreds of millions, right? And Amazon, Jeff Bezos wanted, 6 years of unprofitability, so he just kept raising and raising and raising and raising. So I think that it's going to be a similar analogy. What will happen is there'll be a lot of hype. There'll be a huge number of these companies going to go bankrupt. I think most of the Bitcoin related companies are at risk. But what will emerge is kind of this new breed of kind of blockchain companies. So it may be that we even have a down year, maybe 2 years, I don't know. But I think long term, everybody is convinced that it's here to stay, but nobody knows what it's going to look like. So 5 years from now, I have no idea what it's going to look like. But it's definitely going to stay. But you're right. It's a good analogy. It's a good analogy.
Are these government regulations for Bitcoin, will it help or
Well, right now it's a massive distraction. I think the regulators have a number of initiatives. I mean, when I was in Money 2020 in the United States in October, I met with the person at the Federal Reserve, and it turned out that she was actually the person who fined Ripple $700,000. So it was a really interesting conversation that I had with her. But what they're struggling right now is they started an initiative in the United States around this whole idea of like a faster settlement and things like this. And they're really struggling with this because so much of the tech is coming from the Bitcoin world that they don't know how to treat it. So things like Ripple, they say, okay, fine, it's not Bitcoin, but we call it like XRP. So, and then the regulator's like, so what is that? Is that a currency? Is that cash? What do I do with that? So I think that this is going to be the number one struggle right now of the regulators is how to come to grips with regulation when the technology is still immature. And I think the regulators are going to wait, and they think they're going to wait to see what the banks come up with. And I think what will happen is the banks will go very, very, very fast on the stuff that's not regulated. So things like, just storing information about a bond. I mean, that's not regulated. So you just do that, right? So it'll go very, very fast. And then when it comes to actually like real money, I think that's where it will go a little bit slower, and the regulators will be a little bit more cautious. So.
Do you think that there is a potential for one big player on the blockchain market, or you think it's going to be spread among like smaller different players, companies?
Yeah, I think. Yeah, I mean, well, there's a few bets that are out there. So there's some bets on some open source platforms. So there's a big bet on Ethereum, and there's a big bet on some of these software providers that they're just going to simply, I don't know, be partners to everybody. So what will happen is all the little guys will keep going to them, and like I said, you can do a hot deploy in a week, so you can get started very, very quickly just by working with one of these guys. But I think at the end of the day, the company that's going to be the Google of blockchain hasn't emerged yet. So I think that's still to be seen. That's my prediction.
So to convince people to use Bitcoin while in so many fluctuations in valuation of Bitcoin, because, for example, one day in November 2014, you have value of Bitcoin of $1,000 and the next day $100.
Yeah, I think. Well, this is my personal opinion. I think Bitcoin will die. So it still continues to grow, and I mean, it grew recently. It's been stagnant for about a year. I think I hit it in one of the slides actually, to be honest. So I'll just show you quickly. Yeah, here. Okay, yeah, there you go. The Bitcoin market capitalization, right? So it saw like a huge spike here in 2013, and then basically it's been kind of flat and declining, and then recently, I don't know why, the Central Bank of Barbados, said that they're going to add Bitcoin to the reserve, right? And then it kind of jumped up again. As soon as you have a real regulated currency solution, why do you need this, right? So the only reason I want to have Bitcoin at that point is simply because I want to stay off the grid. That's it. I want to hide my money, but why would I hide my money in something that's fluctuating? I'd rather just buy a piece of land and that's it. Or go to the bank of yes, exactly. Actually, the best thing to do is buy gold and just hold that. That's probably the best thing to do.
Do you have a plan how to convince a bigger group of clients to the virtual virtual currency? I'm talking about the safety problem.
Yeah. No, I think. I think it's going to be a little bit like the internet, right? Where, when internet banking started, I mean, I did it firsthand, right? I remember like when we were trying to raise money for Intelligo, everybody turned us down. They were like, you're nuts. And I was like, yeah, but look who's out there. I mean, ING Direct was kicking ass in other markets. So ING Direct was doing great, and you had Egg, and you had kind of First Direct, and okay, fine, it wasn't completely an internet bank, but it was a direct bank. But here in Poland, like nobody wanted to invest. They were like, nobody's going to trust the internet. right? So I think it's one of these questions that would just simply be answered over time. If you give somebody a mobile app and you say, here's some dollars on your mobile app, if it's digitized or if it's not digitized, they're not going to care, as long as they can spend it.
Just out of curiosity, just when you think, forget about the Bitcoin.
Yeah.
When I'm thinking about blockchain,
Yeah.
regardless of the Bitcoin, it sounds fantastic, actually.
Mhm.
Processes-wise, great opportunity for companies to share information.
Yeah.
It's cheaper. But what are your plans, or what do you believe the industry will do to actually explain this to the end customer, like C customer?
Yeah.
Because what we know in banking is that if the customer, the final customer, not a company,
Mm-hmm.
person, does not understand how it works well, he either have to be very trustful towards the company, or he will not use it. And the blockchain, it is complex.
Mm-hmm. Yeah. No. Absolutely. I think that, well, at least what I'm seeing is because of maybe the regulatory space, the real early investments that are getting more traction is in areas like capital markets. That's like behind the scenes. So you don't see it. So if I need to settle a trade, I need to settle it fast, and I need to have it closed, and I don't want to have this kind of, okay, fine, I've closed it, but now I have to settle it, right? Because that's where all of this, this is where these guys are basically ripping off the banks, right? So you read whatever these books about these guys who steal, or they screw up and then they double down and then they lose $2.3 billion for UBS, right? What they're doing there is they're exploiting the system where the trade settles and then in the back office they can doctor the papers. If you put all that on the blockchain, you can't do it, right? I mean, the settlement happens immediately, it's cleared, that's it, and you have a complete record. So that's why a lot of banks are really pushing hard into capital markets applications, into settlement applications, and the end customer has no clue about this sort of stuff. Yeah, so there's a lot of investments on the back end, operational efficiencies, things like that that's happening. And on the front end, it's a struggle. It's a regulatory struggle. It's a question of what is it, that sort of stuff. So, I mean, our company is making a big bet on the customer front because we think our tech is unique, but it's going to be one of these things where it's going to go slow to go fast. I mean, we don't know exactly when the breakout year is going to be. So we're taking a big bet on that. Yes?
You need to be a FinTech geek to distinguish Bitcoin and blockchain.
A bit, yes.
I agree that there is a risk that if Bitcoin collapses, and I agree that it eventually will, then it will harm also the blockchain technology sentiment and end users, like from the previous question.
Yes.
Don't want to have anything to do with the institution that works with blockchain or has anything to do with blockchain. Because my friend just lost $20,000
Yeah.
or $4 billion in Bitcoin investment.
Yeah, I mean, that's exactly it. I mean, yeah, I mean, I experienced that firsthand, right? I mean, in Telego, in 2003, our German partner needed to sell. So we're like, okay, fine. So, let's find somebody to buy it. And, the entire internet bubble collapsed. And we could not find anybody to buy it because they're like, oh, yeah, internet, you can't make money on this. And you guys are an internet bank? Forget it. We're not going to invest in that. So, I mean, we sold it to PKO BP, so that was good news. But, it was really, really painful because suddenly nobody wanted to bet on internet anymore. So I think you're exactly right. I think there'll be a moment when Bitcoin collapses, everybody gets scared. Only a few smart investors who really, really understand that you should invest, that's the moment to invest. So the ones that really understand that that's the moment to invest will invest. But most of the guys who are just, lemmings, they're going to have a cooling off period. So I think there'll be a tough year. I don't know where, but there'll be like 1 year that's going to be tough, and then it will just go back up again. Yeah. Yes. Yeah, that's where you hack it. Yeah, that's the moment when you want to hack that stuff. Yeah, that was the Mount. What is it? This is Mount Goa hack or something like that. I think that I'm not sure exactly the details on that, but with Bitcoin, if 51% say a coin is okay, then it's okay. So if I mine the coins and I mine a whole bunch of fake coins and I get those all coins to like agree that they're all okay and I put them in circulation, then effectively I've created fake currency, right? So so that's exactly it. So that's the point. So that's going to be the point of failure, right? So if I don't know, fake a document and then I put it onto the blockchain, you're going to have this ability to kind of unwind and change information, right? And so I think that's going to be one of the challenges of the technology, is not the technology itself, because I can't alter it, but now I have to unwind the transaction, right? And I've got to redo it. So that's a huge challenge. You're absolutely right. That's the point of failure. Mm-hmm. What's that? Well, I mean, what they're all doing is they're doing exactly this. So they're creating this ability to unwind a transaction or just create a new transaction that effectively cancels the other one out, so you can have a record that there was a bad transaction and a good one, and that sort of stuff. So that's one of their design principles when they do things like land registries and things like that. And so if you can figure out really good solutions for that, you got a business. Okay, there was another question, but now the hand is gone. There we go. Yeah, look, I mean, at the end of the day, 90%, 99% of customers probably won't even know that something is blockchain. I mean, the exciting, I mean, these guys are kind of linking, for instance, blockchain to like Internet of Things, right? So can I have my, can I do a micropayment from a stored wallet, right? Because right now it's incredibly hard to do that, because if I try to do that, I mean, how am I going to do that? Am I going to use that like a bank transfer? I mean, how would I do that, right? So let's say, for instance, I mean, I had a good conversation with somebody yesterday in London, and we were like, okay, so could you imagine a situation where you like, right now, when I go in and I rent, I don't know, an office, right? I have to rent, the office for a month or something like that. Or if I rent one desk, a hot desk, right? So I go to whatever business link and I rent a desk. Imagine if you just say, look, I'm going to be in the conference room, and as you walk in the conference room, it's basically just charging you for every minute you're in the conference room. What happens if you bring a friend in the conference room? So it's charging the friend, and I say, okay, I'll give you an incentive, because as the friend is being charged, I'll pay you. So if you bring your meetings over to this into the location, and you bring more people into the location, you're actually going to get a kickback. And I can create incentive programs on that, and I can do that on micropayments. I can't do that on credit cards or wire transfers or anything like that. I need to have something that's free and zero cost, and I can only do that with a blockchain. So the interesting thing is, like, what's going to happen if there's charges, your refrigerator is now connected, your car is connected, right? You're making transactions, your car. I mean, imagine if you put, for instance, a store of value in a car. So let's say, for instance, I want to rent a car, and now rather than renting it by the day, I just go in, I put like $100 into the stored value in the car, right? I go over to the petrol station, I pay for my gas, but it just comes directly from my car. I don't have to pull out anything. My car pays for the gas. It pays for the tolls. I return it to the rental agency, and I get whatever money comes back to me. I mean, that's the beauty of Uber, right? I mean, that's what I love about Uber, is I can walk out of the Uber car, and I don't have to pull out my credit card. It just pays automatically. So now if I rent, so this is where this thing could be going, right? So if I can do that on the blockchain, I mean, the customers won't care. They just want to know that, I got my car and I didn't have to pay at the petrol station. I just drove through, grabbed my gas, and I went. I mean, imagine that experience. I mean, that is a killer user experience. Yeah, exactly. I don't know. I'm not sure. I hope I have bigger problems than that. Okay. So, okay. Other questions?
One more, maybe? Okay, we can reach David during the break.
Okay. Thank you.
Thank you very much, David.